Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw the sell side has been a little bit more dominant, but overall it's a very balanced session and our short-term directional bias continues to be neutral. Heading into the open, we have pre-market support at 47 to 48, and holding above that still leaves the door open for buyers to step in and push ES back up towards the 52.5 to 53.25 area with the previous VPOC and the gap fill right there. The first area of resistance, primarily from the overnight session, is at 54.25 to 55.75, and then the main resistance zone on the day is at 57 to 59. On the downside, if we break 47, we can quite easily fill the gap and test the 40.5 to 43 initial support zone. That's still an area where buyers can step in on first test, but the better area of support is down at 35.75 to 37.25 and 31.5 to 33.5. On the upside, in the event of a breakout or a directional move above 57 to 59, ES can test 62.75 to 64.75, and then the better area of resistance is 66.75 to 68.75. Now, the next major catalyst is the employment report due tomorrow morning. So today we can continue to balance within the recent range. We don't necessarily have to put in a big breakout or a big breakdown. Now, short term, we can break lower and test initial support and potentially even 35.75 to 37.25, but you can see over the last several days the market has been trading within a range, within a balance, and it's unlikely that we're going to break out from that bigger overall range ahead of the employment report. So that means that on the downside, 35.75 to 37.25 and 31.5 to 33.5 are extremes, and they can cap the downside. On the upside, the 62.75 to 64.75 area can technically still attract sellers, and then the 66.75 to 68.75 can cap the upside even in the event of a short-term directional move up. So we know that we're trading in a very balanced market, and that's why our short-term directional bias is neutral. So we just have to be mindful of that and be cautious in terms of trade location, because right now the market is simply trading essentially in the middle of that balance and is chopping around that big high volume node of 52.5. So you don't want to get caught up in short-term chop. If there is no clear momentum on the day, then it's best to be cautious on directional trades and focus more on taking zone fades at the key zones. And the stronger the zone, the higher the probability of a zone fade working out. So 40.5 to 43 is still an area where buyers can be active, but it's better to look for an entry towards the bottom or middle of that zone. And again, it's discretionary. We have to see how the day is developing, what kind of momentum situation we're in. If we're seeing excess weakness and strong downside momentum, then there may be no long setup at initial support, and it might be better to wait for 35.75 to 37.25 or even 31.5 to 33.5. On the upside, similar situation. If we're seeing a lot of upside momentum, and let's say we are putting in a proper breakout above 57 to 59, then there may not be any setup at 62.75 to 64.75, and it may be best to wait for 66.75 to 68.75, which is a higher probability area and a larger time frame area of resistance. And then same goes for 70.75 to 72.75 with that big high volume node up there and the recent swing high. So the better setups right now, if the market is going to continue to be very range bound, which is the likely scenario ahead of tomorrow's jobs number, is to focus more on zone fade setups and just be a little more cautious on continuation setups and just be mindful overall of trade location. So unless we're seeing big momentum one way or the other, those continuation setups can be quite risky because of just the very balanced state that the market's in. So let's keep an eye on 47 to 48 off the open. That's going to help establish the short-term intraday bias. We know that if that area holds, the buyers can still step back in and we can get a retest of yesterday's high, pre-market resistance, and then if there is enough broad market strength and enough upside momentum, then perhaps we can go higher, but that's something we'll have to determine in real time. So those are our main ideas heading into the open. Let's see if the buy side can maintain the short-term control that we saw yesterday, and we'll take it from there.